So what is a life settlement? A life settlement is the sale of an existing life insurance policy to a third party. Now, the policyholder gets paid cash right now, say $50,000 or $100,000 or $200,000 right now, and the investor collects on the policy when that person dies, say $500,000, $1 million, or $2 million, for example. Let's say, for example, Joe is a 79-year-old retired executive. His 2 children are in their 50s, and they have stable careers. His wife has passed, and his company had been paying on a $2 to $5 million life insurance policy during his employment with the company. And then he, since retirement, has been paying, let's say, the $20,000 or so per year on the policy, and he decides he no longer needs it. Maybe Joe can simply not afford the premium payments anymore. Maybe Joe simply wants the money. What can he do? Well, one, he can stop paying the premiums and the policy will just vanish. In fact, 98% of policies just vanish into thin air. 98%. Now, there is an alternative, however. This policy has a value to someone. So what if instead of letting the policy lapse and Joe gets nothing, Joe sells the policy to a third party? It's like creating money out of nothing. So Joe gets $50,000, $100,000, $200,000 or more, depending on the value of the policy and his life expectancy, instead of letting all that money vanish into thin air. So Joe wins by getting a nice fat payday. The investor wins by collecting on the proceeds when Joe dies of several $100,000 or millions of dollars, depending on the policy value. The only one who doesn't win is the big fat rich insurance company. Actually, I think they already won by collecting on all those premiums for all those years, so I think they'll be just fine. In fact, there is about $14.8 trillion in life insurance outstanding in the United States right now. A person pays hundreds of thousands of dollars to the insurance company, and the insurance company pockets all the premiums and pays out nothing in all but 2% of life insurance policies. So no wonder life insurance companies are some of the richest companies on the planet. Now, some people have heard of viatical settlements. That is not the same as a life settlement. For a viatical settlement, the person who is selling his policy, the viator, is terminally ill or chronically ill and only has a set number of months to live. With these policies, the states generally prescribe how much one must pay based on the time frame and the policy value. Now, although the secondary market for life insurance is relatively new, the market was more than 100 years in the making. The life settlement market would not have originated without a number of events, judicial rulings, and key individuals. For example, the Supreme Court case of Grigsby versus Russell established that a life insurance policy is private property which may be assigned at the will of the owner. Justice Oliver Wendell Holmes noted in his opinion that life insurance possessed all of the ordinary characteristics of property and therefore represented an asset that a policy owner may transfer without limitation. Wrote Holmes, life insurance has become in our days one of the best recognized forms of investment and self-compelled savings. And this opinion placed the ownership rights of a life insurance policy on the same legal footing as traditional property such as stocks and bonds. And as with these types of property, life insurance policies could be transferred to another person at their discretion, at the discretion of the policy owner. Now, this decision established a life insurance policy as transferable property that contains certain specific legal rights, including the right to name the beneficiary, change the beneficiary designation unless subject to restrictions, assign the policy as collateral for a loan, borrow against the policy, sell the policy to another party, and so on. Now, life settlements can also act as asset protection tools because life insurance proceeds are protected from seizure in many states, and there is not any public record showing that you own a life insurance policy. So almost no amount of forensic auditing could find your investment. Now let's talk about the morality of life settlements. Is it moral and ethical? Now, we were sitting around just last weekend around a dinner table having the discussion with 4 couples just the other day, and one of the people asked, who sitting at this table is going to die someday? And of course, everybody nodded. And if you buy someone's life insurance policy and they get paid, are they still going to die someday? Well, obviously, it is the investor sitting around hoping the person's going to die? Well, no. The investor is sitting around knowing that someday that person will eventually die. We all will. The investor was also able to get money into that person's pocket and help them out financially before they passed, instead of like 80 and 98% of life insurance policies that vanish into thin air. So that investor did something good, and as a result will eventually receive something good in return. So in our view, it is a perfectly moral and legal win-win arrangement. Now, if you or someone you know has a life insurance policy that they would like to turn into cash, or if you would like more information about investing in life settlements, our licensed affiliates can help you do just that. So here's what you do. Visit our website at assetprotectionplanners.com and fill out a free consultation form, or call us right now at 1-800-830-1055. And if you found this video useful, please click like below and also share this video and in your comments or questions below, and we'll be glad to help you. Thank you.